panel. I still think that we're skipping lunch, so just enjoy what is here while listening to the panels. So I'm really happy to introduce you to your next moderator, Stefan Millington. And we are back to serious topics, digital asset custody solutions, and road mapping startups for digital solutions. Enjoy the panel. Actually, it's called Fireside Chat. And yesterday for a roundtable, it was very important to put tables on the stage. So where is the fire? Thank you. Stefan, can I invite you on stage so you could introduce your co-panelists? Amazing. Enjoy.
Hello, hello.
Hello. Good afternoon, everyone, and thanks for joining us. So I am here. I'm going to let everyone sort of introduce ourselves. My name is Stephen Millington. I'm a partner with Forensic Risk Alliance. We do a lot of work with the fin services and crypto world, doing regulatory advisory and various investigations on it. And, you know, this whole thing of custody and, you know, what that means within the digital world is a fascinating topic for me. I don't profess to be an expert in the crypto side of it, just more of the where things go wrong and what I as a sort of Luddite can see from outside the industry, and things that need would be interesting to get your take on as encourage that mass adoption here. And maybe if Mehow, and Baron, if I can get you to quickly introduce yourselves.
Hi everybody, Baron Koch. I'm CEO and co-founder of MoneyBridge, and mass adoption is a perfect place to start because that's our goal, right? So my two co-founders and I have a background in asset management. We have managed about $3 billion in institutional money, and we're transitioning that to crypto. We just saw an opportunity to help bridge to mass adoption by creating simple on and off ramps. And the difference between MoneyBridge and some of the competitors is, while many of the competitors offer 70, 80, sometimes up to 200 tokens with clean, nice infrastructure, our on and off ramps use a different liquidity source so that we can access essentially any token. So the projects you see around here, which aren't quite yet eligible for the Coinbases of the world, the MoonPays of the world, that's where we fit in. So yeah, great to be here and talking about an interesting topic.
I'm Michal, Pospieszalski. I'm the CEO, founder, and one of the inventors of the MatterFi technology and a custody solution, and also wallets, hardware wallets, software wallets. And we invented payment codes, which makes it really easy for mass adoption people to use crypto. Our whole mission is to help, actually, I talked to MoneyBridge yesterday extensively. I talked with you guys, and it was a really good conversation because we got to, how do we make it even easier for people to, for instance, get on-ramped and use a wallet and not be confused by MetaMask, for example, and make it super simple. And so for me, it's like you're solving, to get the custody solved, you got to make it super secure. You got to solve a lot of security problems. And at the same time, you got to solve a lot of usability problems, because typically those two things don't go together. You have really great security, you have really hard usability. When you have really easy usability, you have really crappy security. So I think that's one of the things that we solved at MatterFi, I hope, and I'm just very excited about that.
Yeah, and all that just from the conversation yesterday. I mean, we have similar goals, and I think the way I would kind of characterize it is just by saying hiding the complexity from the consumer is really. It seems like the next phase in really great crypto companies are going to focus on consumer psychology and the experience of the consumer as they go through the process. And we actually saw a stat yesterday on one of these stages that for a new user to set up a DeFi wallet and top it off takes about an hour to an hour and a half. And that's just not a great way to introduce someone to the ecosystem. I mean, that's not a great way to start a relationship. That's not what people want. They're hesitant to begin with. We need to meet them where we are and build something that they essentially already know how to use. And that's the goal. So, I mean, things like payment codes that Mihaw's talking about, I mean, this is taking care of the security while also meeting the consumers where they are with something that they can use. I mean, I think the onus is on us as industry providers to come up with something that they want to use, enjoy using, bits of crypto without the complexity.
Absolutely. Setup in our wallet takes like a minute. So
yeah, and I was going to come on to that, Mehow. I mean, you know, obviously, if you talk about crypto and everything, you know, from all the end users and, you know, wanting to have this mass adoption, which is critical to building out a bigger market cap, bigger asset class, effectively, that is there. And, you know, one people that are not within the industry is that they look at, you know, the safety of, you know, and I think from a custody perspective, from my view, there are two areas that perhaps we could talk about. One is, you know, the safety of your own personal wallet, where we talk about private keys and all of this sort of thing. And the other, which we can get onto later, is sort of that, you know, a third party or exchange is holding custody and how we make sure that we secure those funds for the participant in it. So, I mean, going to the first part of the private keys, and I know, Mehow, you've done, your firm has done an awful lot of work in that, is, you know, how do we make that so that it does gain that confidence for the individual investor to come in? Because I think, you know, if I sit at it, look at it, I'll turn around and think there's an complexity. I don't know how to use my iPhone, but I use it, right? I don't know how crypto works, but people are a bit more skeptical about using it because they hear these stories of people losing wallets with hundreds of millions of dollars or, you know, whatever in there. What can we do to make that, you know, to eradicate that issue?
the question is, how do we eradicate the private key issue?
Probably, pretty much.
Oh, okay. So we can't get away from private keys until we develop some whole new cryptographic scheme, but we haven't since the 70s. So we're stuck with private keys, and they are really amazing at securing things. And so what we do in our case is we provide a hardware wallet to all the end users. So it's like a card, and then that's got their keys on it. So that's one form of backup. The other is when they initialize the card, which I don't have the card with me, but maybe when you're talking, I'll run off and bring them back. But
I have a card.
you have one of my cards. All right, awesome. So this thing has a chip in it and an antenna, and it's a private wallet, private key wallet, just like a Trezor or Ledger. And it'll sign transactions without the private key ever leaving the chip. But we make these custom for your business, right? So on startup, this thing is listening to the radio interference from the galaxy. Off that entropy randomly generates your keys, and then it displays the 12 words. And it says, hey, put these in your safe. So now to lose the funds, you got to lose the card, and you got to lose the 12 words. And optionally, we have key escrow on top of that, which we can work in so that there is a backup to that, right? So really, that's the best we can do. In the amount of key escrow schemes, there's dozens of different ones. I mean, you ring signature, you can have a multi-party unlock, you can have all sorts of stuff. But we just work on that with our customers to see what they want. But so far, our customers have just gone for exactly that. It's 12 words and a card, right? And then the sort of cool thing about this is that you can you custody your off-chain funds that a third party is too. So the private keys work everywhere.
Okay.
Cool.
So it's a solution of limiting it to not just, you know, where there was only one effectively one place where it's held, where you can, if you lose something, it can be reconstructed.
We can make it 3 or more places.
Yeah.
So what I would add to that, so for MoneyBridge, the custody part of it, I think I'll talk more about the onboarding part of it. I think it's generally the idea is if there's a multiple step process that we're requiring the consumer to do, as much of that as we can do for them, we should. So a lot of another issue with that causes people to be hesitant about the crypto space is you hear about these abandoned transactions where you send something and the receiver doesn't get it, or it tries to go to a different chain and it doesn't work. So on the onboarding process, it's for us, that's a multiple step process where there does have to be multiple swaps involved and the fiat currency involved. So our approach has been to do all that for them and just deliver them the result. So meet the customer where they are. Say, what do you need? What information do we need from you? Minimize the amount of work and information you have to give us, and then just deliver the result they need. So it, not specific to custody, but it does speak to trust. And I think if you can help save them from themselves a little bit, it's pretty effective.
And just going on to the other obvious issue that you can see with custody is, we have a lot of times where money, we'll trade through exchanges or other third-party custodians. Now, because of the lack of regulation that there is at the moment, most of these custodians are, there isn't always an insurance, there isn't always that coverage that you have if you put it into your traditional finance solution for that. And I think that, is deterring a lot of that mass adoption that happens. And where is the industry going in terms of making sure that, if an exchange does go into bankruptcy, that there is a protection to the people that, that exchange is holding custody for? And maybe Barrett, if you first, give Mehow, get your answer.
Sure. So, I think a lot of these exchanges are now saying, if you want your money back and you want it in a cold wallet, you can do that. But there's still this worry that, at any point in time, the Coinbases of the world can have access to your funds. And I think that has to be very clearly, resoundingly communicated that that's not going to happen, because that's a real fear, and that people are not okay with that. I think, you look at the solutions that are being offered and the people that are working on it, because the traditional custodians of the world are looking at this too, the Bank of New York's, JP Morgan's, et cetera. And I think one thing to note here is, coming from an institutional money management background, there's an opportunity to basically take care of the custody and fund structure in one fell swoop. Traditional investors, whether they're high net worth, institutional, or whatever it is, can invest in crypto, have access to DeFi yields, have access to the benefits of crypto, but without having to worry about the custody issue. So, if you invest in a commingled fund or a drawdown structure or whatever type of fund, traditional fund wrapper in place, it just gives people a lot more comfort as to the worst. So I think that's kind of something that's in the early stages of development, but that's where I see at least part of this market going.
So it's like what Baron just said is like functional requirements for what we're doing, right? So we're actually implementing that exact thing. Couple aspects of it I can talk about right away, which is that in our custody system, the users have proof of their off-chain private key, and every time they transact, they get a cryptographically signed receipt. So like, imagine like all of a sudden Coinbase was kind of like a chain, except it ran in real time. That's what we created. Right. So now imagine those servers all disappear. The users actually have all the information they need to restore the balance on the server. And to restore the funds on the server, you just need to restore the last set of receipts. So it runs really fast. And therefore you now have, like, if you want a drawdown fund or quant or anything kind of crazy, these servers with cryptographic proofs will actually execute all that functionality. And then on the, so that talks about the custody of the individual user in an off-chain scenario. And what about the custody, right? How do we do that? How do we say prevent an admin from stealing money? So again, we actually custody everything in our system in a multi-sig pool. So there is no single key ever. It's always multi-party computation. But the parties are computers that run on secure chips. They're not people. So the only way to steal the money out of a pool of, say, 7 out of 11 is to break into the 7 out of 11 chips. Or one of the 7 parties that has all the backup keys and all collude to all steal the money. So it's like, it raises the bar considerably in terms of hacking. So things like Quadriga CX and Mt. Gox can't happen on our platform at all. They're not possible because you can't write a Willy bot that just buys crypto for, you know, a minus $1 balance. So, and I think a lot of that speaks to, which is, okay, how is there like a middle ground where the users have power and the custodian, meanwhile, gets to offer services and returns on the custodied funds? And that's really one of the problems we're trying to solve.
Okay. And sorry, one of the other things, yeah, that raises or questions to my mind is, yeah, we want to get mass adoption with all these crypto funds and how do we, you know, at the moment, you know, there are lots of developments from, you know, the crypto world in terms of how they are, you know, how you're addressing this, how you're creating better security from a custodian perspective, limiting all of that. From a non-crypto person, the difficulty that I see is that they perhaps probably don't understand a lot of this. You know, within the traditional finance market, people have whether it's right or wrong, they have an understanding that the regulatory system works to protect them to some extent, and they rely on that, and there is confidence in that. How do we get, you know, do we need regulation, or do we need people to understand the market in between?
Yes, to both. I mean, the way we view it, I mean, I think a lot of people's answer to mass adoption is education, right? We need to educate the consumer, and I don't disagree with that. And I said this on the stage over there, but I mean, I just view the education in 2 different buckets. I mean, I think it's definitely important to educate the consumer on the benefits of crypto, why go into it, what you can get out of it, why it's a way of doing things. But I don't think we should ask of them to learn how to use it and to learn the complexities and learn the regulatory complexities and all that stuff. The more we can hide that from them, the better. The other thing that comes to mind, just in terms of, you know, regulations I mean, it's called a roadmap to a startup, right? I mean, what we found to be most important is to have really strong partnerships. I mean, we're not lawyers, we're not experts in all this stuff, and it's changing. I mean, I think to say like we've got the regulatory environment figured out and we're going to go solve it is pretty. That's not what we're saying. Put it that way. I mean, I think that's a big task. So having multiple partners who can help you and keep track of all the developments in the space, I mean, that's proven to be really invaluable for us.
Yeah. So for us, we work with that. We're never going to make a MatterFi wallet that users can use. We're going to make a wallet for MoneyBridge, and then we work with the partners on which features are integrated so that the partner, like MoneyBridge or a Casper Association, for example, it's one of our bigger customers, how they will communicate the features that they understand in a way that fits with their ecosystem. So, for example, and depending on what and what the regulations are, our tech can theoretically, because of the KYC features, meet a lot of those requirements. All of a sudden, you as a business may be able to offer a guarantee because now you have the technology to do it. So, KYC is like a big component of that we haven't really talked about, but we came up with a way to have 100% reliable cryptographic proof of KYC for on-chain and off-chain transactions. You always know, you can always know who your counterparty is, and you're 100% sure you sent money to their private key, but third-party observers don't know anything about it. So it doesn't leak privacy, but it gives full KYC to two willing participants. So that's kind of like the mix between what you said and where we're at in terms of trying to make it as simple as possible. Specific scenarios, creating as much guarantee as we can that's based on the underlying tech that we don't have to explain to people. We can just say, hey, you got a guarantee.
Yeah, and I would add to that the KYC AML stuff. I mean, when we started talking to people a year and a half ago, that was like a 4-letter word. I mean, people, they didn't want to hear it. We don't want KYC. This is crypto, which I totally understand, and I get that sentiment. But I do this from our view. I mean, I think the perspective of most people here is like, yes, let's stick to the crypto ethos, but at the same time, we might have to compromise a bit on, getting people from fiat to crypto in a way that is compliant and in a way that is on the up and up. And I do think that in general, the industry is more receptive to that kind of approach now.
Yeah, I think that's really fair. The crypto market is more open to regulation and all of that. And I think, let me just very quickly, as a last question, on the back of that to both of you, and is they are more, crypto market's more open to regulation, all of that. Who's going to solve the custody solution? Is that going to be crypto? Is that going to be the industry, or is that going to be the regulator? Because the regulator is always, not just in the crypto industry, but in any industry, regulators always 2-3 years.
I think it has to be a collaboration, and I mean, I think that the crypto industry is starting to put forth like legitimate leaders who are going to the regulators and sitting down with them and say, not only how can we help and how can we work together, but pushing them to realize the benefit of this new technology and to get their stuff together and look at it. And I do think I'm seeing that collaboration across the industry and working together with the gatekeepers, so to speak, as opposed to just reacting to them.
Yeah, and the other thing I would add, so for example, we have a little paradox that really speaks to the conflict between regulation and users and the tech. Not really a conflict, but it's a paradox, because what the tech does is it allows you to put your identity, like your full name, your home address, your payment code, and now you can receive money, right? But that creates fear. It's like, oh, well, everybody's going to know who it is that I'm doing business with. But what the tech does is it means that only the people that you've actually transacted with know your identity information. Everybody else just doesn't, right? So it's interesting. That's like a thing that a hump I have to get over with users, that no, you can actually do KYC with, say, your bank, and you can leave this payment code credentials and it's fine. No one can correlate the transactions that you did on chain with your identity unless they're the bank, and then the bank can only correlate the transactions you did with the bank, but not the transactions that, say, me and you did. So for me, it's absolutely about like taking that explanation. Like, we don't need the users to understand everything, but we definitely need the regulators to understand everything, because they're not going to think of us as the industry to think of the solutions and be like, hey, okay, here's the tech, here's what it does, how can it help meet these regulations, and what benefits can a consumer have from complying with the regulations such that they want to, right? So our whole thing is decentralized security. It's not a forced thing. It's the user has to want to do it because they say want to onboard some new crypto into their wallet.
Thanks. Look, I know we've run out of time. It's been fascinating discussion. I'm sure there's a lot more to go, but it's been great to talk about it. Thank you.
Thanks.
Thank you, guys. Thank you. Thanks, Brent.
As the time flies by, so many times I've forgiven in my mind. My dreams keep haunting me. I get no sleep. I keep thinking that I won't stop by while you won't let me try. Still my mind.